Hey traders, Raghee here, and in this recap video we're going to start off the conversation with the trade of the week that I published yesterday, and it actually does tie in quite well to some of the currency conversations, dollar index, and euro moves that we saw today. So let's talk about the IBB. Now this is a strategic way of looking at markets in front of major events, and I'll include the link for the trade of the week in this email so you guys can watch that after you watch this video and see how this all came together. IBB had a major rally up. And don't worry about the biotech for a moment, but IBB had a major rally up in anticipation of a very specific event, and this was the CBO releasing the analysis of the Obamacare repeal. The IBB rallied up in anticipation of what could be a deal. Anticipatory moves are the easiest and most fragile types of moves because it's a buy the rumor, sell the news type conversation. So when we saw as today progressed and we had the nice sell-off there, this was actually an awesome 7-point move from the trade of the week, the TOW that I shared yesterday. The move to the downside reflected a few things. One, the letdown, and two, as the government could not make yet another, and this is not political, gang, but as the government could not make yet another expectation a reality, the dollar index takes it on the chin. So we circle back to the currency conversation. So you take a look at the DXU September dollar index futures, you see how this sold off. This was actually a 2-point play because earlier in the day, and you can actually see this play out really well on a 5 or 15-minute chart. So let's open up the 15-minute chart. Earlier in the day, you can see the dollar index had already had a dramatic move. This is accompanying the European and UK Open. So you see a move that happens between, say, 2 and 4 a.m. You know this is post-Frankfurt, post-Paris, post-London Opens. So the sell-off you see here, go right to the economic calendar and take a peek at what we were dealing with. We had ECB President Draghi speaking at 4 a.m. This is Eastern, okay? So when you look at the calendar and then you look at the move, you go, okay, this is that move, 3 a.m. Central, 4 a.m. Eastern, that's the move on the sell-off. So Draghi initiated this. Why would the dollar sell off? And this is something that my futures traders, if you're playing EC futures or if you're playing DX futures, you've got to understand. Even those of you that are still looking at some of the movement of dollar and gold and dollar and bonds, right now the dominant narrative is going to be Mario Draghi and the European Central Bank and the anticipation of the taper. And I'm basically pounding the table on this because the ramifications are far more than those of the Euro-US Forex traders. This is, of course, Euro FX futures, FXC currency shares, and all the things that will happen to the US dollar and dollar-connected markets as the euro continues to ramp up and it sends the dollar lower. This is nearly a 100% negative correlation. In other words, euro heads higher, dollar has got to head lower. This kind of negative correlation with euro strength on Mario Draghi is going to send the dollar lower. Now you'll see there's another acceleration to the downside. This started to unravel as it became clear that the CBO's analysis, and then consequently you take a look at the Senate Republicans in the US here, were basically, I won't say admitting defeat, but we have a delay in that reform or repeal vote. You don't need to get in on the politics. I don't. It's about psychology. When something's not going to follow through politically, the dollar will weaken. So it's already fragile because of the euro bullishness, and now you've got a U.S. reason for dollar weakness. And a lot of people are saying, well, isn't the FOMC going to hike again? Gang, this move is so already factored into the dollar. No hike is going to suddenly make the U.S. dollar turn its, whether you're looking at FFU or FFZ, there is no hike in the U.S. dollar that's suddenly going to make, or no hike in the U.S. market that's suddenly going to make the U.S. dollar an uptrend. So if you're looking for the dollar to start heading up in any meaningful way, breaking the uptrend, breaking the downtrend on the daily, see, I'm getting all excited here. If you think that an FOMC rate hike is going to change this, remember, we've already had two, and look at the dollar. So is there a reprieve for the dollar? There might be a correction, and it will be absolutely sold into, which means your opportunity is going to be in a couple narratives. EC futures getting long, US futures getting long, and please abandon the gold dollar expectations because that correlation has not been tight. Look at gold chop around. Dollar is absolutely in a downtrend. You're not seeing a sympathetic move. You're not seeing a negative correlation move here. Gold is moving with its own type of narrative, which means there's probably a little bit more bearishness to gold than bullishness. I see the red grab candle, so trade what you see. I've got a zone between 1258 and 1260 for a potential move to revisit the 1242 level. I mentioned gold not because it's a connected move, but because too many people are expecting the correlated move to the dollar. Okay, but keep an eye on the US, the 30-year heading higher. Keep an eye on the EC futures, also heading higher. Two different narratives though, gang. One is the balance sheet as it applies to the 30-year. Counterintuitive, I know, but it is panning out. And the other is the ECB taper that will send the euro higher, dollar lower. And anytime we have any kind of governmental hiccup, watch again for the dollar to take a shot on the chin. So IBB, the sensitivity to a government kind of hold up, sent the IBB lower and then sent the dollar lower too. Check out that trade of the week, because the lesson here is markets that move dramatically in front of an event are particularly susceptible to these kind of moves. And this has been a 7-point move in the IBB. Does it matter that it's an ETF? No, it's the psychology that we're playing, and it plays out again and again. So I hope you've taken away something from this that I'm telling you right now you can replicate in many markets for the remainder of your career, gang. I'll see you in the next update.